All right, guys, let's make sure that the volume is on. Testing. All right, guys, good morning. Good morning. Happy Monday. It is July 18th, 2022. Red Bull energy drink in hand. It's time for a new week. Let's get to work. Let's rock and roll. All right, bottom right hand corner of your screen, black logo. Turn on notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. My name is Carlos Garcia, the founder and host of G.A.R Capital. Thank you so much. Host for the video, founder of the company, but ready to rock. 276 points up on the Dow, NASDAQ up 116, nearly 1%. S&P up 0.80%. Russell 2000 up nearly 1%, outperforming the majors. Crude oil bouncing off that daily level on the 200-day moving average on the daily. Let's take a look at that real quick. You could see here bouncing off that 200-day of 93.53, up 3.5%. Gasoline futures up 3.23%, $3.31 a gallon. Gold futures are up as well, 0.60%. 1882 for silver futures up 1.24%. Euro dollar bouncing. We talked about that. If you had some time, the euro's so bad, maybe it's interesting and good. You go long right at that parity level. That's the level everyone's freaking out of. Usually you get these weird, really crazy spikes or falls. Usually reverts back to the mean. Maybe euro gets back to 110 in about 18 months. Why not? Take a look at it. We'll see it together. Euro dollar. Let's go and take a look at, well, in all time frames, it's pretty much as low as it gets to the most part. In 2000, we broke below. But looking at it here again, not much support really until you start getting to around 103.85. If you get back to around 107.81, again, that would be a nice support as well. But again, it just remains to be seen on the euro dollar for my Forex people. Let's take a look at dollar yen. Again, another one that's been soaring. 142.98 is your extension here based on the last movement on the daily. So again, 142.98 or 143 would be the next extension up if you're expecting the dollar to continue its rally. Let's go and take a look at Bitcoin futures up 5%, 22,285. Ethereum holders rejoice. We're now near 1,500 on Ethereum, up 17% on the futures today. Very nice. And copper futures are up 2.5%. Again, a good recognition of economic activity. Usually when the copper slows down, that's pretty recessionary since you're not getting much building, since copper is a very common used material for building different things and such. So copper is a really good barometer for industrial activity. You could say the same about steel. You could say the same about crude as well, or lumber, or any commodity, or that's used in factories. Let's take a look at the VIX. Volatility index does have a gap up. There's a gap to fill at 24.29. Go ahead and put that alert this morning. Again, if we do get a little more of a sore job on Dow, we're off the highs, then VIX will reject this 20-day and go ahead and fill that gap to 24.29. Let's go to the US dollar. We know that how important that is. And interesting, dollar is down, stocks are up. Are we starting to get the actual correlation here? Next support around 106.89 on the hourly. If we do break that, then it gets really interesting to around 106.42. We are setting ourselves up for at least some kind of squeeze to the upside. Does that 4,000 level hit? Remember, we've been talking about that 1 year, that gap to fill on SPX. Let me go and bring it up. This is S&P spot, and you could see it right here. Still have that gap to fill right around 40.16. I'll go and place the alert there, at or above. That's the one gap to fill. We have one gap to fill to the downside, and then we'll have another gap up today. 3,800 is another gap down on SPX, so we have that. We can go and place that alert there. That's your gap to fill. But so far, looking like we are going to get some kind of ignition higher, some kind of squeeze. 39.13 on SPX seems to be that resistance. Again, that's that fib line. You can see that we're now at 38.94, kind of came back a little bit. So we'll probably open right around 39.03. More than likely, guys, we'll probably reject. So I wouldn't want to go long here. If you are long, I would go ahead and take my profits in the morning. 39.13 is resistance. I would probably want to go ahead and short there and see if we can go again and get this gap fill around 37.95 over the next couple of days. We don't have a ton of economic data this week in terms of the Fed or what have you. Let's go over it together. I posted this on Instagram as well. Let me go ahead and, yeah, we'll just use this. Okay, let's go ahead and move this over for you guys. We got housing index at 10. We have building permits tomorrow at 8:30. Housing starts. Again, that's a leading indicator for housing. Brainard speaks at 2:35. We have existing home sales at 10. So again, a very heavy real estate type week. Crude oil inventories are every Wednesday, 10:30, unless specified otherwise with a bank holiday. Philly Fed, we have unemployment claims on Thursday. That's every Thursday. Nat gas storage, that's more of something for Europe. Obviously, they want to know natural gas as, we're almost ending summer here and getting into the fall and to the winter in a couple of months or months down the road. Natural gas is going to be expensive. Flash services PMI and flash manufacturing PMI on Friday. In regards to next week, that's where it gets interesting. We have PCE, we have FOMC, we have GDP, core durable goods orders, but we'll get to that next week. Let's take a look at some pre-market movers. We got some news coming, some earnings that came in, Goldman Sachs and Bank of America. I'll go over that here in a second. Boeing up nearly 4%, Goldman Sachs nearly 3.4%, Chevron up 2.5%. We do have a Chevron position with Investment Club that we just had. JP Morgan up 1%. Procter & Gamble slightly down. That's more of a risk-off movement. Again, we know that Procter & Gamble is a consumer staple. They become more of a defensive play, like Coca-Cola or Pepsi when stocks go down. Walt Disney up 1.37%. I did enjoy Walt Disney, so maybe they took some of my money and then it became bullish. Alphabet down 94%. Obviously, be careful. That's a stock split. If you're looking at your bank statement or your brokerage statement and see Alphabet down 94%, don't worry. It is a 20-for-1 split. Alphabet, and meaning Google, is now at 112.77. Could be interesting for a trade. We'll go ahead and look at that in here a second. Ford is up 32%. Tesla was price upgraded 2%. AMD nearly 1.9%. Carnival up 2%. Remember when Morgan Stanley said they might be going to zero. And Amazon up 1.25% after a strong Amazon Prime couple of days. I think Prime Days or Prime Day. Not really sure. Let's go ahead and take a look at some headlines, and then we'll answer some questions. Let's see. Deutsche Bank. This is from Deutsche. The company could report potential upside to low street expectations for Q2 margins, driven by good cost execution and continued pricing strength. And we expect management to reiterate its full-year deliveries growth of 50%. That's regarding Tesla. Deutsche adds Tesla as a catalyst by idea. That's why we're talking Tesla. Tesla this morning is up about $15 pre-market. Let's see what else that we have. Bank of America. Bank of America CFO says economic uncertainty related to the pandemic is being reduced, and I quote, Bothwick, who is the CFO, says asset quality remains, I'll go and show you, asset quality remains near historically good levels. Quote, yes, we are reserving for loan growth, and yes, we're changing our baseline assumptions for a macroeconomic environment that appears to be worsening, he says. But they're also able to release reserves based on the historically good performance of credit card loans, he says, quote, the reserve releases are likely behind us, but obviously at this point we're going to watch how the economic conditions develop. Take a look at Goldman Sachs. Goldman Sachs shares surged as much as 4% pre-market Monday as the bank reported second quarter earnings that were better than expected in nearly every area. Revenue of $11.86 billion compared with the average analyst estimate of $10.67 billion, EPS of $7.73 versus forecasts of $6.65. Quote, we delivered solid results in the second quarter as clients turned to us for expertise and execution in these challenging markets, end quote. David Solomon said in a statement, despite increased volatility and uncertainty, I remain confident in our ability to navigate the environment, dynamically manage our resources, and drive long-term accredited returns for shareholders. I am an owner of Goldman Sachs stock. That is great to hear. Here's the one that stands out to me the most. Bank of America. Consumers delivered their highest quarter ever for spending. They're spending. The bank continued to see shifts in what consumers are spending on. It was things like services, travel, and fuel rather than retail and physical goods. We talked about this months ago on the Morning Note and Investment Club video. We said people are transferring from buying stuff to doing stuff. Fuel costs are up 40% year over year. He says it still only amounts to 7% of consumer spending. So again, this is Bank of America. Their ears to the ground to Main Street. They see bank balances, they see credit cards and loans. They seem pretty confident in the consumer. Again, I can't see a recession when the consumer is this strong, when unemployment is this low, and retail sales are this high. It's almost like we are at to the point of what? That we're almost talking ourselves into recession in a weird way? Could be. But again, the numbers are showing otherwise. Coinbase Global gains approval from Italian regulator, part of its European expansion. And one more piece in terms of Bank of America, Borthwick says they're not planning to pause buybacks, mostly because they don't have to. That's good news. The firm is looking to January of 2024 as the next time it will see its CET1 ratio requirements go up again. That gives them 6 quarters to build capital, and he seems confident they'll be able to get there. So some really good news from Bank of America. And then you always have the other side. You have bear market will continue even if the U.S. avoids recession. This is Morgan Stanley's Michael Wilson, who's been on point across the board in regards to this bear market. So I'll read you the note. Morgan Stanley's top U.S. equity strategist, Michael Wilson, has continued to urge investors to stay defensively positioned despite counter trend rally. We talked about that gap fill possibly to 4,000. The strategist believes that it is premature to exit defensives at least either a recession is confirmed or the risk of one is extinguished. Quote, with profit growth likely to fall sharply over the next several quarters, the risk of labor cycle is increasing in our view, and this is the only metric we think that matters for whether we enter a recession or not. Again, that's the labor cycle, that's employment. He also noted that most investors don't own defensives, which leaves more upside potential in these sectors as earnings cuts begin. Quote, consensus is calling for strong top-line growth but margin headwinds. Change in net margin is expected to be negative year over year and detract from overall EPS growth, that's earnings per share growth. That said, that this margin pressure dynamic is expected to be short-lived, and margins are expected to contribute positively to EPS growth post Q2. We are skeptical on this front given of the myriad of cost pressures companies are facing coupled with the accelerating demand risk. So again, they're saying positive EPS growth. So even the biggest bear is saying it looks like we're kind of turning the corner from what I read. The strategist also reminds clients that the earnings revisions breadth is in negative territory, a key reason why he believes EPS estimates are too high. Quote, this move to the downside revisions breadth has accelerated in the past week, and the measure is now to its lowest level since July 2020. What happened post July 2020? Well, we did pretty good last I checked. So even the talk of maybe we don't get a recession, we went from we're going to have one for sure to maybe we won't. I mean, that's a shift in the narrative. And again, unfortunately, the goalposts do move a lot, especially in the markets day to day. So what can we do with this information? At the end of the day, guys, we still have to wait for earnings. I mean, we have to see those revisions. Goldman Sachs, great quarter. Bank of America, decent. I mean, there's some good notes there. JPM, okay, but still did all right afterwards. And Citibank had a great quarter. Wells Fargo, not so much. I mean, well, kind of mixed. JPM pretty mixed, and so is JPM and Wells Fargo were pretty mixed. Citi did great. Goldman Sachs did great. Bank of America mixed on the top and bottom line. So a lot of earnings. That was just the banks. Those are the main guys that we wanted to go over. Morgan Stanley was relatively mixed as well. So again, those 5 are the ones I kind of focus on the most. If we bring up XLF, which is the financial ETF, you could see 32.12. And again, I still like banks long term. Again, very good value, great balance sheets. Again, they have their nose to the ground, their ear to the streets. They know what's up, and they have all the data to back them up. And again, Bank of America saying that the consumer is strong. Maybe we should listen. Maybe we should. Good morning, John. This is from John. Morning, Carlos. Do you think Google will pull back a few days after the split, similar to Amazon? Yeah, usually the case. Usually pops right in the beginning, and then it kind of falls. We do have a gap to fill. That's been filled. If you're looking for a play to trade, let's just say, let's go ahead and take a look at the daily on the 1 year. Again, really, you're not doing anything to really 120. That's really where you start kind of seeing a breakout. I can't believe I'm saying Google at 120. So 120.35, that's a breakout on the daily. In terms of the hourly, not much happening. So yeah, you do have a gap to fill here around 119.65. If we do break maybe 115.76 right there, then we could probably play that gap fill. I would wait for that. Actually, you know what? I'd wait for this here around 117. 117 confirms that move. We'll go ahead and play calls to the upside of 120. If we start breaking down below possibly 110, then you could short down to 107. That's what I'd be looking for. Thoughts on semis with the Pelosi news? Yes, she does have some semis. We do have the semi legislation coming. We did trade AMD last week. So AMD here, I mean, there's a gap to fill. More likely, it'll fill in the morning. 81.11. Maybe we'll come back down and reject that S&P futures. You do have about 86. If we do break above 84, maybe we'll go for the 86. Kind of keep it tight. Maybe 85s or so for AMD. If we go and bring up Nvidia. Nvidia looks a little better. There is a gap to fill around 158.61, so I'd want to be careful with that. Maybe we fill that gap first and continue forward. Maybe 166. That seemed to be the last kind of a consolidation level here. If we break above that, then we can start taking a look at 175, 170 or so. And then if we add Micron to the list, which we traded last week, it's above 62.15. Nice gap up here. There is a gap to fill at 61.51. If we bring up the daily, we do have a little more room to the upside around 65.95. And this is 62.26. It just filled that. We have 64.34 on the 50-day on the daily. The best one to look at of all of them, in my opinion, probably AMD looks the best, NVIDIA being next, and then Micron being next. Those are the three semiconductors I would look at for the upside, because we do have that legislation. Is it going to pass? No, but at least the debate is there, and we'll see if that kind of juices up semiconductors. They've been beaten down, but again, the growth opportunities are there. Thoughts on Tesla and then their Bitcoin holdings causing it to dip? Well, Tesla right now is really all about the deliveries. Do they get the deliveries? That's really it. It's kind of like subscribers for Netflix. It's all about that. So Tesla does, I believe, report this week. Let's see if I can find that. Tesla reports on Wednesday after close. So we know they're going to be expensive in terms of IV, implied volatility. I would stay away for Tesla. Let's wait till after their earnings and see what they do. Can you provide a quick high-level explanation of why does the market rise when the dollar weakens? Wow, high-level explanation, that's a tough one. That's a lot of expectation for me. I'm kidding. What I can do is make it an easier one, and I'll give a little more of a detailed one. How's that? Very simple, inverse correlation with dollar and the S&P or stocks. The S&P biggest part of the S&P is the mega caps. They do a lot of business overseas. If you have a strong dollar and you do business overseas, in order to repatriate that money or bring that money back to the balance sheet, you have to get foreign currency and convert to dollars. It's called currency slippage or Forex costs. We've already had that with Microsoft. We've had that with other companies that have been talking about that. The dollar is at levels we haven't seen in decades. Of course, it's going to be a little more of a headwind to stocks. The real catalyst here is the fact that as we are more of a global economy for years now, these mega cap companies, and again, I'm not just talking tech, I'm talking about banks, I'm talking about industrials, I'm talking about energy too. Again, a stronger dollar is good if you're someone that sells goods in America and brings the money back to their country, Japan, China, or the EU or England. But in the opposite context, our dollar is strong. If we bring profits that are in yen, euro, pound, Swiss franc, or whatever, and we bring that over, they lose value. So again, it's almost like a hidden tax in a sense to these mega cap corporations, which actually compress their profit margins. Again, that's a cost, a hidden cost called foreign currency slippage or foreign currency conversion cost. So again, that becomes more protruded or stronger as we get a stronger dollar. That's really the big reason why the dollar being down is helping stocks. And when the dollar is up, stocks are hurt. But I can't say that's high level, but that's as pretty good as an explanation that you can have, that you could share yourself when you're out having a cup of coffee with someone. And the dollar is super important. But thank you for the question. All right, let's go and take a look at yield before we close up shop for the morning. 10-year yields on a daily kind of holding up below 32. Kind of consolidation, but again, still downward trend. Would like to see if we break below 29. Again, I want lower rates, obviously, for people who want to buy a home or refinance a home or to borrow more money. It's very stimulative, obviously, lower rates. I don't expect higher rates as we go. I know everyone's saying, oh, we're going to get to 5%. More than likely, we're not going to get that. We're just going to continue to go down as demand for bonds are still there. Man, we had a pretty decent 30-year bond auction and a decent 10-year auction. The shorter end of the curve, the demand is not as strong because we expect rates to go higher. The Fed is talking about 75 basis points next week. That seems to be the lock-in. August, no rate decisions, and in September, we'll see where we go. But with that being said, dollar is what we're focused on. Dollar, yields, VIX, those are the three that we're looking at. And of course, Ethereum will be on my radar because they're up today and I own Ethereum. We'll leave it there. Have a great rest of your afternoon. I'll catch you guys later for the aftermarket recap at 5 p.m. Eastern Standard Time. Have a great rest of your afternoon. Let's make it a great trading week. I will catch you guys then. Cheers.